Hey guys, my name's Chris and this is Financial Fitness, and Facebook did a face plant today. It's down 26%. Now, I don't own any of that stuff. I don't really care to be a part of Meta, socialist media platform like that. My videos get taken down there more than anywhere. I had some people try to share my videos over there and they get taken down and they get in jail over it. They don't like truth. Just know that. I would never invest in somebody like that. But that's not the point. The point is this chart. The point is it went down 26%. It's the biggest drop ever. And it's the biggest loss of market cap by any company in the U.S. history. Putting it in context, Facebook has lost more value today than the market cap of 455 and SP 500 members. And after its opening collapse, the retail crew has arrived, and according to Fidelity, thousands of retail investors are buying the dip this morning. So you saw on the chart, the guts fell out of it, and the stock market's been going down consistently, unless you've got oil stocks. But people are buying the dip, and it's still going down, and it's really strange, and it might keep going down. It might not be like last time. In 2020 when it went down, crazy down, you know what? I'll walk you through it. In 1987 when it went down, they had the plunge protection team come in, and they consulted the president, and they manipulated the markets, and they got the stock market back up. And then in 2000, the Fed bailed us out again. And then in 2008, the Fed opened the can of worms. They kicked the wasp's nest, and they let Pandora's box wide open, and they started creating money out of thin air. 2008, they opened it a little bit. It's the foot in the door method. In 87, they fixed it. In 2000, they fixed it. In 2008, instead of fixing it and shut the door, they fixed it and left the door open, and they shoved their foot in between the door and the door jamb. And now it is open, and money starts to just fly out the door. Okay? Remember, in 2008, that was a measly, I don't remember if it was 700 billion or 800 billion with a B. Don't get your B's and T's mixed up. You hear these numbers and people just talking, and they're just talking heads about B's and T's. But remember, B is little and T is enormous. The next market crash was in 2020, and we all know what that was. We're still there. It's like we've had this false recovery, and all these stocks that aren't worth what they're valued at went way up. And I didn't buy in 2020. And every bone in my body was telling me to buy it, buy the dip, but my gut was telling me it's not real. It's not. It can be gone tomorrow. You have this wealth effect. Everybody feels rich when they're worth millions of dollars because they're all invested in the stock market. They're invested in America, the speculation country. But after that, I went through the 2020 crisis. I watched the stock market go up and up and up and up. And now it's like, should I buy the dip? Well, here's the thing about dips. We're at the top of the speculation bubble, in my opinion. The dip was here. Now we're up here. And it seems like when you step back and you look at it, like the commodity sector, like WTI oil is over $90 a barrel. Food prices are going crazy. Fats and oils are up 50%. Eggs are up 40%. Fuel is up 100%. I went by the fuel pump today. It was $3.50 in North Louisiana at the place where I usually get it. And prices are going to have to go up in the field too. I'm about to show them on paper. I'm going to make a video about it, of what I have to use and how everything's going up. So the wages have to go up. And it's important for you guys that do work for other companies that might not see inflation, or maybe they see it or they don't really know what it's doing. because they have to bid these jobs, and I have to bid my job that I do for them. And mine's about to have to go up, and theirs is going to have to go up. And the people that are going to eat it are the people that are consuming natural gas. That's the way it is. I want to show you one more chart I've never seen before. It's called the stocks to commodities ratio. Check it out. I just wanted you to see that. It's looks like commodities are running down from stocks as stocks are at an all-time high. And you look around at the store and your food's expensive. You know, this inflation thing's starting to dig in, and the prices that we denominate in dollars to buy the commodities are probably going to go up more with massive money printing. It's already, they can say whatever they want, but why are prices going up? Are the goods more valuable? Well, food is going to be more valuable because we're about to have a crazy crop failure everywhere because we don't have any fertilizer. I did a story on that yesterday or this morning. So if you're interested in holding a commodity, I'm not a financial advisor, but I hold at least 10% of my wealth in physical gold and silver. It hasn't had a chance to run yet, and it very well might go way down in this catastrophic crash that we might be looking at. We don't know. But just kind of think about it, mull on it. I just wanted to bring this information to you. It seemed really interesting to me that people are buying the dip, and it seems like you're buying the dip essentially at an all-time high still. We just came back a little bit, considering to where we have been. Like I said before, I missed the 2020 crash, and I want to have some money to invest in this next one, whenever it may be. We just don't have time. If you're interested in buying precious metals, I've got a link in the description below to SD Bullion, and my wife has recently secured a broker's license from Miles Franklin. So if you want a bigger quantity of gold and silver, I'm positive we can save you money through Miles Franklin. It doesn't matter to me where you get it. I would prefer you buy it from me, but what is important is you get it. Go to the coin shop, whatever. Skip 5 lattes, it'll buy you a piece of silver. Maybe 4 now. We'll see. But anyway, y'all have an awesome day. Thanks for watching. I'll see you tomorrow.